In this video, I'm going to prepare you to start assignment number 13, where you'll be developing a starting balance sheet and 3 years of operating budgets. So we're going to take a little bit of time and go through the first part of chapter 4, financial analysis and management. So the main topics that I want to cover today will be let's first start talking about accounting. So this is the definition right out of the textbook. Accounting is the process of collecting, analyzing, classifying, and accumulating historical financial data in categories that will reflect the financial condition of the company's operation. So accounting is where we're accounting for something. We are essentially just collecting the data. We want to analyze it as well. So when we start looking at accounting, systems should be designed on the organizational structure of the company, the functions that are performed within a company, and the types of management reports needed by company managers. Now, we're not going to go into a lot of detail on that on this point, but what we want to do is get you prepared to be able to develop some of our budgets that ultimately would become part of those accounting systems. So when we start looking at accounting methods, there's two methods. There's the cash method of accounting, and then there's the accrual method of accounting. So most of the time you're going to find in construction the accrual method is predominant. When we start looking at billing for a project, oftentimes we're basing that off of a percent complete method, which is taking the cost incurred to date, and we're dividing that by the cost incurred plus the estimate. So the important thing when we start looking at our accounting systems, we're going to have what we call primary accounting systems and secondary accounting systems. And this is the key thing. So in our primary accounting system, oftentimes what we have is line items in our budget that essentially account for the company. So ultimately, when you run a company, it costs money to run that company. And in running that company, we're going to have certain expenses. And on an annual basis, we're going to put together some type of operating budget that we're going to essentially budget for. We're going to predict what we will be spending for. So in our primary accounting systems, this is financial accounting, and this accounting method is regulated by GAAP, which is the general accepted accounting methods. As you look over here to the right, this is an example out of your textbook. It's figure 4-1 on page 68 and 69. And basically it's showing us here a coding system, which becomes very important, whether it's our primary accounting system or our secondary accounting system. And what you'll notice right here is we have basically an indentation type system. I look at it kind of as a work breakdown structure in a way. But if you look at this on our codes, we have a coding system that's on the furthest outside point. And as we look at that, those codes, those numbers are going to be reserved for the hundreds. So you'll see right here, we got accounting code 100, 200. In our textbook, it continues down, goes 300, 400, all the way to 700. And then we indent, and what you'll see is what I'm going to call our subcategory code. You'll notice that this is based off of a numbering system on the tens. So underneath the code 100, we're now going to code 110, code 120, 130, all the way to 190. And then we can't go past 190 under that subcategory, so we go back out to the next main category, and we're the 200. And then as we get to the next level, you'll notice that these are the single digits. So instead of 10, 20, 30, we're going to have 112, 114. In other words, in between 110 and 120, you can have 111 through 119. Now, the other thing I would just take note of here is notice here that accounting code 100 is our assets. We look underneath here, the subcategory will tell us the different types of assets. So one of our assets is cash, one of our assets is short-term investments, one of our assets is receivables, inventory, construction work in progress, so on and so forth. And then as we look underneath cash, again, we're going to another level underneath, what I'd call the detailed level. And there's different types of cash that we can have as an asset. And so you'll see right here, we have cash on hand, we have cash in bank. So that would be the different ways that you could describe the different types of cash. Okay. As you go through and you create your operating budget, if you don't see something that is in the detailed description or in the subcategory or the main code, it's okay to create one. Let's just say that we have something here. I'm going to come under here, construction work in progress. We got direct construction cost. Maybe I want to create one that's called well, actually, let's come up here under our receivables, and let's say I want one that's called contracts receivable. So I could create one that was, let's say, let's just call it 135, and I could call it contracts receivable. And oh, it looks like we have one already for that, but you guys get the idea. You can create something that describes what you want under the description that's up above. Okay, so that's our primary accounting system, and this is what you'll be looking at for the most part in assignment number 13. Going to our secondary accounting system, this is managerial accounting, and there's no specific rules that a company has to use. Myself as an estimator and a project manager in a construction company, managerial accounting was what I was involved with. When I was an estimator, when I put together a project, a bid, if we were awarded that, then my job was to go into our accounting system. And in that accounting system, I would go in and I would put in the budget under these different, what we would call cost codes. Okay, not our primary accounting system, but this would be on a secondary level where things would be. Now, again, this comes from figure 4.2 on page 70 of our textbook. And what you'll notice here are this numbering system. This is based off of the old master format, the 16 major divisions. A lot of companies still use that in their accounting systems. You'll notice right here that in the master format, we had a 5-digit subcategory section, and that's where these numbers are coming from. And so you'll see right here, 02200 in the old format was earthwork. 04100 was brick masonry. 06100 was our rough carpentry. And so we use this coding system in that description for master format to develop our secondary accounting systems. So this might be actually this is somewhat an example of how we used it. So oftentimes what we would do, if you look down here, we would have some type of preface, CMU construction. That's not necessarily all that relevant, but we'd actually have a job number, and then we would have an accounting code from a managerial level that would be assigned to that. So there's different ways that we can assign numbers, cost codes, accounting codes in the secondary accounting system. And this is just an example of that. Another thing I would just make you aware of is there's different type of accounting software out there. Sage construction software was originally developed under Timberline, a Timberline accounting software. And that accounting software was developed specifically for the construction industry. There's also software called Viewpoint. It's formerly known as BidTech. That was a software that I was very familiar with in industry. And that is the software where I would go in and input my budget for the managerial accounting. And then, of course, there's all kinds of other softwares out there that may not be specific to the construction industry, but smaller companies might actually use those softwares like QuickBooks. Okay, so let's talk just for a minute about the financial statements and what you're going to be putting together for assignment number 13. So you're going to start out with a preliminary balance sheet. Okay, and before I get to that, I'll show you an example here really quick, but on that balance sheet, what you need to know is we have assets equals liabilities plus owner's equity. Okay, that's the accounting equation. In a balance sheet, they call it a balance sheet because both sides of the equation have to balance. So the total of all your assets has to equal the total of your liabilities plus your owner's equity. If they do not balance, then you have a problem. This is an equation that can be analyzed algebraically in different methods, and that's what these two lines here are shown below. So owner's equity can equal assets minus liabilities, and liabilities is equal to our owner's equity minus our assets. It's, again, just a pre-algebra problem solving for one of those three variables. Again, going back to our textbook, I believe this comes off of page 86. In an operating budget, you have revenue, you have direct costs, which is our project costs, our company overhead, and our profits. Many times when people think of a budget, they think of essentially what your direct costs are and what your company overhead is. We're going to be analyzing this in more detail to where we're also going to account for projected revenue and for projected profits within that operating budget as well. Okay, so that takes me through what I want to show you from a PowerPoint. And what I'd like to do here really quickly is show you a couple more items. So first off, let me come back to this one. You will find this template in D2L. I'll show you where to go and get that in just one second. But you'll notice right here, you have a starting balance sheet. I have created this, so May 31st, 2020, that's going to be the date that we want to essentially project what our balance sheet's going to look like. Now for this exercise, what we're going to make an assumption, and that assumption is for you guys, is you're going into this with having $50,000 cash that you can invest into this company. So you're going to start with $50,000, and you'll notice right here, that's my total current assets. I don't have any fixed assets, so that's my total assets. My total liabilities, at this point, I don't have any liabilities, and therefore my owner's equity would be $50,000. So zero liabilities plus $50,000 owner's equity equals $50,000 in assets, that balance sheet. Balances. Really quickly here also, let me go to the operating budget for 2020. I've formatted this for you, but you will have to add and you can reformat as you feel necessary. You'll notice on operating budget 2021 and 2022, that does not exist. You'll be able to copy and paste once you get this created into the next fiscal years to create those budgets. So the recommendation I have is go through and complete operating budget for 2020 and then copy and paste and then make the adjustments based on the assumptions that you're going to be making in that following year. Okay, so I'm going to go back now to just an example here, and I will post something similar to this in D2L as well, so you guys can get some help. But basically, here are some of the simple assumptions that I've made. And those assumptions is that from my $50,000, let me actually come right here. I built a formula. I've got $50,000 minus $3,500, which is what I spent cash for my office furnishings, $5,000 for computers, and another $4,000 for software. I've lumped those together, so that's $9,000. And then this final $5,000 I put as a down payment on a company vehicle that I assume that I would need. The company vehicle is worth $15,000. And so what that means is when I've gone through and I've purchased everything, I've got $32,000 in cash, and I've got a total of $27,000 in fixed assets. which gives me a total assets of $60,000. On the opposite side of the accounting equation, what we'll notice right here, we have long-term debt. That is my company vehicle. Remember, it's a $15,000 vehicle. I purchased that vehicle for $5,000 cash, and I assumed I borrowed the rest of the money. So my liability is $10,000, which is my long-term debt. My owner's equity is still $50,000. I threw this equation in down basically right there to balance and make sure that both sides match or equal each other. So again, total assets, which is $60,000, equals my total liabilities plus my owner's equity. 10,000 plus 50,000 equals my 60,000. So the first part of assignment 13, simply put, is you need to go through and you need to take that $50,000 and say, hey, this is what I need to be able to start business. In my case, I'm going to say on June 1st, 2020. So these are the expenses. These are the purchases I'm going to need to make. I'm going to need to borrow some money. And so you're going to create that preliminary balance sheet using that method. Okay, really quickly here, let me go to the operating budget. So again, my operating budget here, I've made some assumptions, and part of that assumption is that starting in January, I've started going out and spending some money. And basically what I've done here, well, let me just back up here. We're not going to get into the nuts and bolts of when this is starting relative to when that balance sheet is. But what I've done right here is I've created a projection. I've created a projection here under revenues that for the year of 2020, that I'm going to be doing just under $1.2 million worth of work in terms of revenue coming in. Okay, as far as my direct costs, I've got right here that I'm going to be spending close to $2.134 million in revenue. Now, why is my direct cost more expensive? It's simply because in my first few months, I'm spending money. In this example, it was actually a project that I don't get paid until I actually finish and make the sale. And so I'm spending money on that project until finally in September, I'm getting receivables from those direct costs. But again, I'm still spending money and I'm not making, I'm spending money here and I'm not making money. The money that I'm getting back in revenues is somewhat in the rears. And so I'm in the show at that point that I'm spending more money than I'm making, which just basically means I'm going into debt. And we'll talk more about that when we get into our cash flow. But you can see right here, I've just made projections for the months of January, February, all the way through December. And I've shown that I'm going to be needing software that I'm purchasing. I've prorated those out in some sense, whether it's a lump sum fee or if I'm paying it on a monthly rate, but I've basically just broken everything down, what my annual costs would be on a monthly basis. So you can see just going down through here, I've got my computer software. These numbers somewhat came from that chart of accounts that I showed you that you have access in D2L. I've got insurances. Remember, as you guys have done some of your assignments, you identify different insurances you need. We'll need to make some assumptions what your monthly premiums on those items will be. Going back to your marketing plan from assignments 11 and 12, you'll need to determine what it's going to cost you monthly to implement the marketing strategies, whether they're strategic or tactical. Motor vehicle expenses, which you can see right here that I'm breaking down into some lower level type items. Got office equipment like computers and printers. Same type of deal, even though you'd purchase a computer or a printer up front, I'm going to basically allocate those out. Let's just assume that My computer is going to have a 3-year lifespan. Let's just say I assumed I'm going to spend $3,600 for the purchase. Then basically that's going to allocate out to about $100 a month that I'm going to be charging essentially or spending to have that computer. So you just go through those charted accounts and you just try to identify everything that you will need to have as part of your budget. So you can see right here, we've got under personnel, I've got a bookkeeper, I've got an estimator, I've got an office assistant, the president, CEO, and the project manager. When you start looking at my rates here, these are not all full-time people. So you can see my president CEO is only making $11,000 during the year. That's just because based on the amount of time I assume, because in my model here, I am the president CEO, but I'm also the estimator. I'm also the project manager. The amount I'm allocating in terms of time annually to work as the president CEO comes out to be about $917 a month, or about $11,000 per year. So you just go down through all this, and that's where you end up coming up with what that monthly operating budget is. Once you get this all done, my suggestion is that you highlight all that, right click and copy, and then you can go to your operating budget for 2021 and you can paste that, and then you're going to want to go through and make whatever changes are based off of your assumptions. Maybe in 2021 you're going to add a second estimator, and so your estimating expense is going to go up quite a bit. So from year to year, I would expect, and especially on the 3 years that you'll be carrying this all through, I would expect that you would be seeing these budgets changed based on the years. If your budget year to year is the same, it means you haven't gone through and accounted for the growth that you should be making. Okay, one last thing here is I'm going to go back to D2L. So if you go back to D2L for this class, you'll notice once again here in the content area, under the assignment instruction sheets, I have put in assignment number 13, which will go through and give you all the details. Okay, if I go back here to course documents, you'll see that I've plugged in here that does not appear to be what I under course documents, that is supposed to be the Excel worksheet, and I'm not quite sure why it is coming up that way. Let me just check something here really quickly. It shows that it's an Excel spreadsheet, so hopefully that will download for you guys. If not, please let me know as soon as possible. And then the other thing you'll notice under course documents here is I do have, in this case, a printout of this primary chart of accounts to help you guys develop that operating budget. So on Wednesday of this week, I will have a live Zoom meeting during the class time that will be there for a question and answer session. So go ahead and go through this, get things downloaded, and then we will go ahead and I will try to help you guys through this in a live session doing Q&A on Wednesday. All right, thank you very much.